Hello all, welcome back. I'm taking a look at this article, and even though I tend to be very conservative, there are a lot of things that got lost in translation over here. And I'm pretty sure a lot of you are taking a look at Seeking Alpha for news. I do myself because it's a very reputable source and it has some nice opinions here, and I like to read what people have to say. But I thought it would be very interesting to take a look at this video and examine this kind of valuation that came out from Kavin Investments, it looks like here. Because people reading this article can get really confused about the numbers that they see. And so it pays to really understand what is going on and what these projections are, and also actually compare them and have the knowledge to compare them with what the company has actually been doing financially. And this one is a very long article that goes down in detail about what is Alibaba potentially going to be selling in the next 10 years or so. And bear in mind that it is extremely bearish. It basically has actually factors that take down pretty much all of Alibaba's sales. And it's a very pessimistic article, a very bearish one. And I'm typically fine with those. I like to examine, both opinions, the bearish and the bullish one. Yet I want to make sure that all the points here make sense, and I kind of wanted to talk about a few of these things here and compare and contrast them to what Alibaba has actually been doing in their cash flow statement and income statement, balance sheet, and all that. So we're gonna see whether this article actually, is interesting in the sense that it can provide us with useful information, or it's just another opinion that doesn't make sense. And one of the things that you will immediately notice here is that the article projects Alibaba's growth rate to slow down at a point of 10.7%. And while this could happen, it will eventually happen at some point, it pays to notice that Alibaba's current revenue growth has been this, from 56, 58, 50%, 35%, and 40% is what Alibaba has been doing since 2021. And if we take a look at the quarterly as well, which the tool provides as well here, you will see that Alibaba's 2022, these are the figures so far, and this points to significantly more growth than the projected 10% that this article is making. So based on this article, this Q4 will be horrible for Alibaba, and it could be the case. It's not unlikely, but this is projected for a 5-year growth rate, and I'm not sure how this is justified. This really points to revenues being suppressed horribly for Alibaba, and this will eventually happen. It does happen with every company, because not every company will be growing. I mean, no company will be growing forever at the same rates, because if they kept growing at 40%, they would eventually surpass the US economy or the global economy. That won't happen. It will eventually dissipate and start going lower. Yet, is that the point? I'm not sure. It doesn't seem to be to be holding its ground, this assessment, because of what Alibaba has been doing in the previous years. I would be surprised if we go from this kind of growth to 10% for the next 5 years. It could happen for a year, of course, but again, I would be surprised if it happens for 5 years. Now, the next things that this article points out here is that they expect a sharp slowdown to the total revenue growth, yes, and also a sharp slowdown in most of Alibaba's business here. And again, this is a very long article, but if we take a little bit of a closer look here, you expect that you see here that they expect this kind of growth for Alibaba in China's e-commerce, for instance. And they do also, one of the things that I found to be very interesting, they get some of the regulatory issues here with Alibaba, and they actually adjust. This is what they do. They actually use this formula of 0.8 to the power of n, where they actually add these net negatives and adjust the 5-year revenue growth because due to these negatives. And so as you can understand, the more times you raise a 0.8 to the power of n, and so if you have like 4 negatives, 5 negatives, this value becomes way lower because it's an exponential. And so the power of 3 is going to be something like 50%, the power of 4 is going to be something like 40%. So this really slows down revenues if you actually point to these kind of practices here as potentially hurting Alibaba that much, and I really can't see how this will be established over the years because of that. And as you see here, this is what is projected for China. which is extremely bearish. As you see, like the past 5 year negative. This is every company, every one of the big companies, at least most of them, a lot of them, three. And so the projected averages have been like 32%, 42%, 279%, and now this takes it down to 12%, 9%, 21%, which is significant stalling of growth here because of these potential net negatives that the article points out. And again, you will see here the growth in e-commerce dissipating more and more. Now, again, I understand that growth will eventually dissipate, but in this current market, we'd have to witness an insane recession, really, for e-commerce to drop, for China's commerce really to drop that low from 26% to a 7% increase in growth. I just don't see how that will be happening, especially when 2022 was 52%. So again, this is very, very bearish here. And other things here that have to do with the expansion overseas with Lazada and AliExpress. Again, this kind of tries to factor all these potentials here. Like, as I mentioned, it's a very, very detailed article about potential projections that are extremely bearish for the most part. And as you can see, it even goes internationally and tries to forecast. You know, these things can be very, very off eventually, and will more than likely be significantly off at the very end. But as you'll see here, this kind of projects some growth with Alibaba International. That could be the case. I think this is actually potentially close to what could happen, although it's very, very steady here. We're noticing the same amount of growth. But what I wanted to point out, and this is the most important part, and this is basically why I mostly made the video. Again, this is a very, very long article. You can read the whole thing. I have. It's as you can see here, let me mention the title again. It's called Alibaba Lost Its Growth, Lost Its Value. That's a little bit of a weird way to say that. But yeah, this goes down into more details. But the thing that I wanted to mention here, take a look at this one. They created a discounted cash flow model, which is what we do also in my channel here. And take a look at these values here. So let's take a look at 2022 and their projections. They're actually projecting that the company will lose free cash flow in 2022. And 2023 till 2030, it's going to be pretty much the same, 3.5 for some reason. So the company will not achieve any free cash flow growth over the next 10 years. This is what they are saying. And they will be making 3.5 billion in free cash flow every year for the next 10 years. So let's go back to reality now and see what's actually happening with the company. So if we take a look at the cash flow statement, we will see that the free cash flow of the company for last year was 28 billion. 2020 was, that's 2020. 2020 it was 19 billion. 2019 was 15 billion. 2017 was 9 billion. And let's go back to the article. The article says, projects a $3.5 billion free cash flow. So basically the article is telling you, and a negative free cash flow for 2022. And actually 2022, whoops, that's wrong. 2022 is already in, right? So we can take a look at the quarterly and see what's been happening so far. So look at the free cash flow of the company. These are quarters, by the way. Look at this. Do they seem like we're going to be going to at 3.5 billion to you? How will that even happen? I have no idea. And as you can see, yeah, the article is projecting a negative free cash flow for 2022. Again, when last year was 29 billion. How does that even happen? The company somehow projects capital expenditures of 22 billion for 2022. Let's take a look at what the capital expenditures have been last year. So the capital expenditures, and we can actually take a look at those here. They are 6.5 billion, and typically they tend to be around the 6 or 7 billion range. So this article, this projection tells us that there's going to be 23 billion in capital expenditures, and that the capital expenditures are going to be in that range for the next 10 years. Starting from 10 billion and increasing to 22 billion. And I just don't see how you actually project that. Why this insane amount of capital expenditures? And even if that's the case, why is the free cash flow negative? Why? Because the EBT and EBIT that is projected, this is earnings before taxes, and this is earnings before interest and taxes, is projected to be 14 billion or 15 billion for 2022. So let's now go back to reality and examine what the company has actually been doing in terms of EBIT. And we can find it actually at the income statement here. And you will see that this is 2021. 2021 EBITDA for the company 35 billion over here, and this is EBT 25 billion, 25. So the article was projecting what? EBT of 14. So it's significantly less. It's like almost 50% less. And I just have no idea why the EBT for the company will go down that much when, again, this is wrong, when it was actually used to be 25 billion, and it has been, so they're actually telling us that it's going to go back to 2019, where the company actually made 14 billion here, and it's going to be even less than that, sitting at like 14, what was it, 14.2 or something. So about that range. But you will see that the article is extremely bearish and also makes some assumptions that don't make sense based on what the company has currently been doing. And this is 2022. Look at 2023. The projected EBT for 2023 is 2.5 billion. Like, how does that even happen? Like 2.5 billion. Again, what was the EBT? 25 billion. So they're basically telling us that Alibaba's earnings before taxes are going to drop by a factor of like 80 or 90%, is what the article is projecting here. And this is going to continue throughout the years, pretty much, with marginal increases, as you can see. So it's almost as if the company is starting from scratch in 2023. So yeah, I don't get it. And this is why I wanted to make a video, because you can find all these articles here that make their own projections and be extremely off, and be scared about those. And the thing is, it's good to examine other people's ideas and see what they have to say, but you always have to adjust them to what is actually happening, and use your own critical thinking to actually deduce whether it makes sense or not. And in this case, the numbers that are projected here are way off and extremely bearish, and even at the most bearish scenario, you are still looking at a company that that is currently underpriced. This is the fun stuff. This is the interesting, and I actually forgot to mention that, you may not have noticed. Look at that here. Even at this extremely bearish scenario, which is completely out of tune with reality, I mean, it's like, I don't know, as if Alibaba is starting from scratch. Even now, even with this scenario, the value per share right now is 120. It's actually less than the current price. So even with this scenario, which is actually the most bearish scenario I've ever seen actually for Alibaba, we are still sitting at an undervalued company. So you figure that out. Thank you for watching the video. I hope you enjoyed, and if you did, please leave a like. That really helps, and subscribe if you're not a subscriber, because we will be talking about these sorts of articles for sure in the future. And in the meantime, take a look at the video that I made earlier about, it was about Alibaba again, and its steep increase in price because of the announced buyback. Thanks a lot for watching this one. I'll see you soon. Bye-bye.